If you have been trading the forex market and you have not been making profit or seeing value on the market, I want you to know that there's something that you are doing wrong. Okay, if you want to be so successful on the forex market, if you want to be having a winning trade all the time, there's something you need to be doing on the market every time. All right, you need to be consistently trading this certain indices or certain currency pairs for you to be able to be familiar on that type of market. So if you are trading the USD market, or you are trading euro against USD, you want to make sure that you always trade that particular market all the time. Okay, or let's say if you do not even have a capital to begin with, you can go over to your demo account, enter into your demo account, continue to practice that particular market and use a particular strategy that you are able to see that yes, this strategy, if I use it all the time, I'll be able to make profit from it. Okay, so you need to be doing this consistently. Practice into this market, seeing true value in this particular market, seeing the downside of the market and the upside of the market. Now, what do I mean by the downside of this market? You know that there's a certain part of this trading market whereby the market would tend to want to go against you. Okay, for example, if you want to place a buy entry at a certain point of the market would go the opposite direction, and you will say like, well, but the market was supposed to go towards this buy entry that I just took. So why did the market retest and go towards the downside, right? This is because you didn't do proper checkup and analysis on that particular trade entry. So what you should do as a trader, if you are trading this forex market and if you want to do a proper analysis, remember that the 1 minute time frame, the 5, the 15 and the 30 minutes time frame, these are all different time frames. Okay, and it takes these time frames, it takes their time frames for each particular market to buy and to sell. All right, so the 1 hour time frame and the 1 minute time frame are a bit different. Okay, they are very, very different. It takes hourly time for the 1 hour time frame to buy, and it takes minutes for the 1 minute time frame to buy as well. So it's going to take 1 hour for that 1 hour time frame to go upwards if the market is going towards the upward trend. But on the 1 minute time frame, it takes minutes, means that it moves quickly on the 1 minute time frame. So now if you're in a market and you saw that the 1 hour time frame is going upwards towards the upward trend, what you should do is to observe that 1 hour time frame. You observe the historical trend and see if the market have sold for a long period of time. So if the market have sold for a long period of time on the 1 hour time frame and the market started to buy on the 1 hour time frame, that means that this market will buy for a certain amount of time. So what you should do if you are a 1 minute trader, because basically let me say about 75% of traders are mostly trading on the 1 minute and 1 minute to 5 minute time frames. Yeah, they barely trade on the 1 hour time frame. So after you have confirmed this entry on the 1 hour time frame, you go over to the trade, which is you go over to the time frame that you normally use to trade. Once you go over to that time frame, then you place your entries. So you have checked that the market is buying for the 1 hour time frame, then you go over to the 1 minute time frame and place your buy entry. So you see the market is going towards the upward trend on the 1 hour time frame, and on the 1 minute time frame the market is going towards the upward trend as well on that same time frame, which is the 1 minute time frame. So you see how accurate that that entry is. The 1 hour showed you that the market is buying, right? And the 1 minute also shows you that the market is buying as well. So that means that the 1 minute will follow that upward trend as the 1 hour time frame as well. So that is a good technical analysis on the forex market. All right, so these are things you need to do when you're trading this type of market. To be consistent, you need to be consistent for you to see profits. You cannot just enter into the market today, then you skip like 4 or 5 days before you trade again. No, you need to be consistently trading this market. So when you're trading, when I mean by trading this market, it does not mean that you need to use your capital to trade this market. If you don't have capital, you can use your demo account. There's always a demo for you to practice and trade all the time, so that you'll be able to make profit when you are ready to use your real account. Always practice in your demo account before you go over to your real. All the strategy you want to use, all the strategy you want to test, go and test those strategy on the demo account before proceed into the real account. Yeah, most people will say that the demo account is not the real account, Most people will also say that the market on the demo account is different from the real. No, they are the same markets, just that the money on the demo account is a fake money and the money on the real account is a real money. And most people will also say, oh, but I practice this strategy on the demo account, but immediately I enter into my real account, the market changed. Yes, the market want to change all the time. That is something you need to put at the back of your mind, that this market want to always change. All right, this market wants to change all the time on you. That's the market strategy, to take away your money. The market wants to take away your money. All you need to do is to be extremely careful. That's why I tell most of my guys in my community that whenever you are trading this market, you need to put at the back of your mind that this market want to take your money. This market always want to take away your profits. Want to take away your profit. Yes, this market want to take away your profits. This market want to take away your capital, your money as well. So what you should do is to find a way to protect your capital, and also find a way to protect your profits, and also find a way to take the market's money. Yes, that is the thing you should do. All right. Remember what I said. Find a way to protect your capital. Find another way to protect your money. Find a way to take the market's money. So you see that on your own side, the work that you need to do is very much compared to what the market is doing to you. What the market is doing to you is just to take away your profit and take away your capital. The market is doing two things to you: take away your profits, take away your capital. What you yourself is doing is three things, and those three things are: you are protecting your capital, you are protecting your profits, and you are also in a way trying to take away the market's money. And when you are in the market and you want to place an entry, always consider these things that I'm about to tell you right now. Consider your lot size. A lot of traders, mostly beginner traders, they do not calculate their lot size, and that's very, very bad. When you are trading on the forex market, you want to make sure that you calculate your lot size before you enter into the market. You calculate your lot size, you plan your lot size. Your lot size will determine the amount of profit and loss you make on that market. Yes, your lot size will determine the amount of profit and loss you make on the market. You see, the bigger the lot size, the more advantage you have in making bigger profits, but also the bigger risk on the market. What I mean by this bigger risk is that if you use a higher lot size, once the market go against you, you are going to lose a lot from your capital. Let's say that you have made a lot of profit. You made a lot of profit from the market and you are still on that market using a higher lot size. If the market should crash against you, you're going to lose all those profit you have already made, and eventually that market may take away your capital as well, and you end up blowing up your account. So you see how risky this trading is, right? So when you're trading this market, you want to make sure that you use the amount of lot size that you can handle. So I always tell most beginner traders that once you're trading this forex market, if you have a smaller account, if you have a small account, you want to make sure that you set your lot size to the lowest as possible. Do not try to make money quickly, okay? Do not try to make money quickly if you are just starting this forex market. Do not try to make money quickly. Study this market first. Be familiar with this market first. Know how to trade first before you are able to, increase those lot size. Your lot size is number one key to trading this forex market, and will determine how much profit and loss you get on that particular market. All right, and also your technical analysis. When I'm trading on the forex market, I do not joke on my analysis, on my technical analysis. I do not joke at all with it. I do not joke with my technical analysis. Yes, I know how to do technical analysis very well. The reason I'm able to do this is because of all the losses I've had when I'm trading the forex market. Yes, all the losses. There's no trader that will tell you that they have not had any loss when they are trading on the forex market. There are many losses. So because I've lost on this market, I was able to improve my trading skills and my technical analysis, my trading analysis as well. So whenever you're trading, the first thing you want to do is to make sure you calculate the amount of lot size you're going to use. After that, your technical analysis. What is technical analysis? This is observing the market, going back to the historical trend, looking at the trend lines, seeing that if this market will buy or it will sell. go over to the 1 hour time frame, confirm your entries, go over to the 5-minute time frame, go over to the 5-minute time frame, compare those trend lines, those movements with the 1 hour time frame to see if it will correspond and match with the entry that you're about to take. All right, I hope you are able to learn one or two from these tips that I've just shared with you guys right now. If you found value, do where to like and subscribe to the channel, The Daily Forex, for more awesome trading tips and strategies. I'll see you guys on the next video.